Good morning, traders, and a happy Thursday out there to everyone. Hope that y'all had a nice evening there last night and are all geared up for this day in front of us here. What we'll want to make note of, just as far as our early morning economic calendar, nothing too substantial on the board. We did have our Bank of England release their monetary policy figures this morning, so little gyrations in some of the select currencies out there. But for our purposes here on the U.S. side of things, we will have unemployment claims, which will be due out at 8:30 there, and then factory orders at the top of those first 30 minutes in the pit session there. So just a couple things on the board to be aware of, and then outside of that, we still have the earnings going on there in the background. So we had a few there in the pre-market, and then of course after the close today, we'll have the Apple and Square or Block due out after the close there. So those will be noteworthy, but for our purposes, we'll be able to take our daily chart, start to see where we stand coming into the session here today. Obviously getting a pretty decent degree of a follow through in the overnight session. We've put in an overnight high, which we just put in a few moments ago at 42.88. So well above the previous day's high of 42.64.75. So good follow through. Now we're working on our fourth day of some low to high trading here for the S&Ps. We've already come up and traded briefly on the other side here of the 20 period EMA, so we have that going for us as well. But very impressive the nature in which we had this extended run to the downside, formed our balancing act at the bottom of the swing, and now have been materializing with a couple low to high days back to back, so not too bad. Fairly constructive as far as just the daily configuration goes. We closed yesterday above this 42.35.50, which was our previous cycle low, so we did a pretty decent job of getting ourselves to settle and above that, and now just in the overnight session we're just proceeding to march up a bit higher. So as far as the daily configuration goes, you can see we're not running into too many additional data points. We do have a daily high just from our trading that was done on the 20th, which may be of value. We'll take a look at that on the 120-minute data in a second, but for now, really taking it one step at a time. We've already come quite a ways as far as the markup goes, from follow through from yesterday. So for one, we will want to bear in mind that if we open right here at 42.87, we'd have a pretty decent sized gap on the opening there, just because yesterday's pit session high, where the regular trading hours highs, was up there at 64.75. So for now, we're about 20 points up above that pit session high from yesterday. So we'd want to bear in mind that we'll likely be left with a gap on the opening. But that's pretty much the main premise there on the daily time frames. As we come over here to the 120-minute display, more of our intraday display, include a couple more data points. Obviously, we've had this nice march. What we don't have forming as of yet is any major signs of sell divergences here on the 120-minute. We have had our markup quite nicely. So for one, we are running into this one singular data point here from this spike high that we had on the 24th. That's 42.90.50. So we're trading a little bit in that vicinity there, but I have a little zone a little further up above marked off just because it was the top of this previous congestion area that we had built out over here on the 120, as well as a previous mild reaction high that we had before, then performing a bit of a continuation down. So as we come up here between 42.90 and 43.04, those will be our points of interest to see how the market responds to those. I could put it in here. I don't want to get the charts too crowded, but just a little bit of that feeling there. So a window, if you would, for the S&Ps to perhaps do some work in there. So we'll keep an eye on that zone and then be on guard in case we are left with any, the gap on the opening, in case we want to trade inside of that at all. And then we'll just be keeping a watch, which we said we don't have as of yet, in case we form any 120-minute sell divergences, but certainly has not ripened up as of yet. So that's there for our ES, and then we have the DAX, which we can also see. Nice follow through from yesterday's action. Same idea here with the 3-bar breakout mode on the dailies. The DAX has gotten on the other side of its daily EMA. It was not quite on the extended run, so that was a subtle difference that it had, but now as it comes to march up, it as well is, making new Globex highs there in this early morning session. So DAX not too bad with its rhythm. When we come over here to its equivalent 120-minute display, we know we escaped our little basing area, or at 15.020 there from yesterday. So did a decent job of getting up above that. And what we'll have here in this DAX is a nice little previous range, or congestion area that we would have to work with. And we're starting to trade into the lower end of it, but this little region here, it's kind of nice. We have 15.216 up to 15.391. Just being in previous zone there, so just dipping our toe into it. So perhaps this 15, this lower end here, this 15.216 should serve us a-okay there in that early morning session. See how they respond to it there at all. Another one though, looking at this 120-minute display, not really showcasing that signs of sell divergence or loss of momentum yet. So that will be one that will take a little time to form, but if it does, we'll be on guard for that there. But outside of that, just moving back up into this previous congestion zone there in the case of that DAX future. And then moving outside of our index future group, we have that of the euro currency here. As we know, this EC has been having quite the swings, has been in a bit of the backwardating market mode, just in other words that it's been slightly more prone to the test and rejects at the upper and lower ends of the ranges. So we know yesterday we had the tail down below, right? Our little price rejection spike after getting follow through from our selling pressure the day following. So we had a tail up above and a tail down below in the case of the EC. Obviously, for now, we're doing some work there closer towards that 2-day high tail. So we got that going for the EC. They're not necessarily out of the woods there, but we got 1.06960 there as that tail area. When we come over here to this hour, or rather the 120-minute data, I think this really helps put things into perspective for this EC as of late. These fairly wide range bars that we've been having here, upper end of the range, we come down, try out all the way down to the other side, and then spring it right back up. So the trade location for something like this, would be rather key. We're already coming back above here. This should be up just a little bit higher with this 120-minute display, this 1.06685. So we've been able to look above that, and now, in honor of the captain's school of thought there, is what we would be dealing with is a bit of an inside pocket, whether you're looking at the 30-minute data or the hourly. It's just from where we had that sharp up and sharp down from the trading 2 days prior there. So that's where we're starting to come back up to this inside area. And note that we had the same kind of feeling before, our big trappy, overnight action, and we gave it all back in the U.S. morning. So sharp up, sharp down, but we had the same version of it, but with a slightly lower high. So we'll see how they pan out this time around there in the case of that EC. And then we got the gold. The gold still keeping itself. Grab these little hourly charts here. Anyway, okay standing here. We did leave the tail, so for one, that previous day's low is going to be a cautious area there for us. If the market started to drop below that point, that would not be very constructive because we did have the 3-bar balance mode. But outside of that, we have the 5 SMA, which comes in up above. We did some testing above it yesterday, just didn't proceed to close up above that there. So we'll have that coming in today at 2000.6, which would also coincide with the tail zone from yesterday. So still kind of doing a balancing act here in the gold. So we'll see as to how they would handle any test closer towards that daily 5 SMA there. Since they did have their first close below, it was just in the context of a 3-bar there. And so far, yesterday we kind of closed as a bit of a doji bar. So GC's got the big tail area there that kind of looms up above. So we want to keep that one in mind. And then we have the crude here. Also very interesting because this one's been slowly, right? We had that previous congestion area with all the price bar overlap and have slowly been escaping from it. So we've been making slightly lower lows on the daily bars there. And what we'll have here in the crude, so you don't have that marked off there, is this 80.30 there from the previous day's low. So we'd certainly want to be aware of that in the crude. But we're still in this camp of it's mild, but this mild channeling action where we come in and put in, this was a little bit of a higher high, but we came in, touched the singles, and then remember we did the cave fill there on the market profile. So we did have some pretty good heavy selling pressure, and now what we're doing is we're kind of stuck in the middle here. If we go to like this 15-minute chart, this was our heavy selling wave from yesterday, so we've come up in a 2-part wave, filled in some of the damage that was done from yesterday. So between this 82.50 up above it's a little bit of a ways up there. And then that 80-30 down below would be more so of a caution area there, so we would put a little yellow line in there in the case of that crude. But not a bad mover there. 5 SMA in case of any type of further up. Like I said, this 8250 here, just from the 120-minute chart, doesn't quite coincide there with the 5 SMA, but in case we had any change in tone and started to put in any type of counter-reactive lift. But for now, they're keeping it under pressure. They're certainly beneath the previous day's high, in which case that 80.30 would be of interest for that crude. And then we have the bonds and the notes, right? The notes will be interesting here today because they showcased a little strength at the end of the day versus that of our bonds, our 30 years. But either way we slice it, the bonds as well had a nice range expansion bar yesterday, so we'll want to see if they've been able, or if they're going to be able to prove that, because we've been having a grand amount of play around that 5% handle there in the yield. So we've departed from that slightly there in the overnight session. So for one, we'll be left with a sizable gap on the yield, or on the bonds from day session to day session. So we'll have that to consider. If I can grab my little chart here and include more data points, what we can note is where we kind of opened here in these yields. Once again, these are inverse against the bond, so we did have a tiny gap area that we could be keeping a watch on. For the yields, it comes in at 4.904 down to 4.884, so we kind of gapped beneath that zone. So just some nice zones to watch here, basis the yields, just a little bit of a different feel than that of the bond futures there. So gap down in the yield beneath the 4.9% mark. So obviously yesterday we closed at 4.975 was our little closing price there on the yields. So we had a pretty healthy gap down there to work with. So we'll bear that in mind. 4.884 up above would be kind of the start of that area basis, the yields. And then if we just come down to the underlying bond futures themselves here and come over to like a 240-minute display, include just a little bit more data. What we're running into is, obviously, if you come over here and look at the daily charts, when we had these 3 days of price bar overlap, is where we're starting to march back up towards. So we've already come back above the upper point of interest I was keeping an eye on here, 111.29. So really any further up from there, they would be dealing with this inside area where we had our bit of a lower high there in the bonds. So you'd be looking at 112.22 there. So, but they've also been one that's already carried the ball quite as way. We already had a little loss of momentum that reverted to its mean. So I got to give the bonds some credit there for having a pretty decent march there. But I do think those yields, right, this TYX.X, will be worth watching there for those bonds. So just a little separate note there. And with that said, let's get our charts back up and adjusted here. We'll let this morning data point come out. That's going to be our unemployment claims figure. Then we'll have the captain on with us about 30 minutes thereafter with his lay of the land. And we're going to be smooth sailing here for this day in front of us here post FOMC. And we're pretty light on the board. We got that unemployment claims and then Apple earnings after the close, but should be a rather interesting Thursday here that is yet to come in front of us. So I'm going to get a couple things adjusted and we'll see how this morning data point settles in here for us.